Everyone, I'm the tax pro, and today I'm going to talk to you about setting up asset accounts in QuickBooks Desktop. So this version of QuickBooks Desktop is for the Pro Premier version. It is not the Enterprise version. Enterprise is just a little bit different, but you can follow along if you want, or you can head on over to the Enterprise video that I did and take a look at how to enter those assets there. So this is the accountant version. I'm going to show you navigation if you're using the accountant version and if you're using just a regular Pro or Premier version. So this is what QuickBooks Desktop looks like when everything is kind of closed out. In order to navigate to the chart of accounts where we need to go, we can use either the accountant drop-down menu right here if we're running the accountant version and head to chart of accounts, or we can go to company. So if you don't have the accountant drop-down, that's okay. You can go to the company drop-down and head to the chart of accounts. Right here, this is going to pop up all the chart of accounts that we currently have in QuickBooks Desktop. Now, these are going to be all the active accounts. You can check this box to include inactive accounts, but it's not an option for us at this time because I don't have any inactive accounts. There are currently 4 different assets here. You'll see the top 4 accounts are a couple different types of assets. I'm going to go over the different categories of assets that Desktop allows us to have, and then help you identify what assets you need to enter into your QuickBooks Desktop account to make sure that your books are accurate. Assets in general are items of current or future value. So we have a couple of different categories here. When we go down to account and click on new, I'm going to kind of walk you through the different categories of assets. Fixed asset, right here it says major purchases. That's an okay description when you think about it. It's going to be things like property, buildings, warehouses, offices, perhaps some machinery or equipment, office supplies and equipment and furniture, like large office supplies, not like paper, but more like large printers or something along those lines. Computers, office furniture, all of those are assets. We also have vehicles, trailers, pieces of equipment, etc. Those are considered fixed assets. These are items that we're going to be using over the course of multiple years. So if it's something that you're going to consume within a couple of months, probably doesn't need to be a fixed asset. So that is fixed assets. We also have bank accounts. So cash on hand falls into the bank account category. We also have checkings, savings, market accounts, anything that is similar to a checking account. Credit cards are not assets. Credit cards are actually liabilities because technically you owe the bank that money. So this is cash that you own, okay? Other types of asset accounts are going to be under this other account types. So we have accounts receivable. Accounts receivable are items that your customers owe you, so amounts that the customers owe you. You've sent out an invoice and now that customer owes you money. Other current assets, these are going to be assets that you're planning on turning into cash within the next 12 months. So an example here would be, let's say that you have an employee that comes to you and they say, hey, I need to borrow some money. They're going to pay you back within the next couple of payrolls. So that would be considered another current asset. We might call that like an employee advance or something along those lines. And then other asset is going to be the category we are going to use for assets that we don't intend to turn into cash within the next 12 months. These are going to have a little bit of a longer cycle. Okay, so maybe a long-term loan. The company has lent money to somebody and it's going to get paid back over the course of the next 4 years or something along those lines. Other things that we may have in here are going to be like patents, copyrights, Those are going to generally go under fixed asset, but you could consider those to be another asset. So I am going to go ahead and start creating some accounts that you most likely are going to have to show you how this works. So most likely, let's start with our bank accounts, okay? Most likely you guys have at least one type of bank account here. So we're gonna choose account type, bank, and then we can name it, checking account. You can put a description here, but you don't have to. So description's not required. You can put the account number and the routing number, but again, you do not have to. This is optional. And then this is gonna look at tax line mapping. So tax line mapping is kind of weird. So what you'll find is your assets in general need to go into the balance sheet. I'm gonna kind of try to quickly go through these asset categories so you have an understanding of what they are. This is not the end of the world, okay? If you don't get this 100% correct, it's okay. Don't stress about it if you don't understand what this means. Now, you're gonna have this B/S stands for balance sheet, and then you'll see balance sheet dash assets. All of your assets generally are gonna go on the balance sheet, okay? We are gonna have assets cash. So these are gonna be things like cash on hand, bank accounts, savings accounts, that kind of thing. Accounts receivable and trade notes. These are gonna be accounts receivable, and then any sort of financing that you are doing during the course of business. Okay, so that you're lending to customers. Maybe you offer short-term financing for customers like over the course of 90 days or pay over the course of 4 months. That would be trade notes. Allowance for bad debts. This is what we call a contra asset account. So this reduces assets, the value of assets. This is a number that we, it's an estimate for the amount that we anticipate we're not going to collect on our receivables. If you are a cash basis taxpayer, you don't have to worry about this, okay? You don't have to worry about allowance for bad debts. In general, if you're a small business cash taxpayer, occasionally you might have to, but in general, you don't need to worry about this. U.S. government obligations. So this is an asset. So this is something that the U.S. government owes you as the business. When would this happen? This would be like if you have bonds. So the company has purchased bonds from the U.S. government. Tax exempt securities. So these are securities that the company owns, right? So some form of note or bond, and it's exempt from tax. Other current assets, this is going to be turned into cash within the next 12 months. Loans to shareholders. So this is where the company itself has loaned money to shareholders in the business, and those shareholders owe the company that money. Mortgage/real estate loans. So keep in mind that these are assets. So these are amounts owed to the business, okay? So this is a mortgage or real estate loan where the business has lent money to somebody, okay? Not that the business has borrowed. Other investments, buildings and other depreciable assets. These are pretty self-explanatory. Accumulated depreciation. When we have an asset, that asset eventually is going to lose value in general. Land tends to appreciate. But, as we use a vehicle, that vehicle loses value. As we use a computer or furniture, that asset is going to lose value. And the process of that asset losing value is called depreciation. Depreciation occurs for physical assets that the business owns. Depletion is what we call depreciation for natural resources. And then Amortization is what we call essentially depreciation for intangible assets. So things that we can't touch, like patents, copyrights, that kind of thing. Depletable assets and accumulated depletion. So we just went over this. This is going to be like those natural resources, land, intangibles, and accumulated amortization, other assets. So those are the options here. Again, you don't have to stress about this being correct. This just affects like reports for tax purposes, but when you go to enter the information on the tax return, it's okay if it doesn't map perfectly. Okay, you can always modify that when you prepare the return. So we may have a checking account. If you have checking accounts, make a separate checking account on the chart of accounts for each account. Same with savings. Savings is going to be a bank account. If you have on-deposited funds, so this is going to be funds that you've collected, such as checks that you haven't deposited into the bank yet. Cash on hand is a bank account. Other types of assets, accounts receivable. You really just need accounts receivable here. Other current asset, these might be employee cash advance. And you don't have to put all of these if they don't apply to your business, but employee cash advance would be some other current assets, any sort of short-term loan, anything that the business is owed. Fixed assets. So you're going to want to make sure that you grab all the fixed assets in your business. Vehicles, furniture and equipment, etc. You can create buckets, so to speak, of assets. So for example, I'm not going to list every single item of office furniture in QuickBooks Desktop. That it gets very cluttered, and the balance sheet can look very very cluttered. So what I generally do is I'll do like office furniture as a bucket, and then I will keep track in a separate system all of the assets that live under office furniture. Okay, so make sure you grab all your fixed assets, and then other assets could be like a long-term loan or something along those lines. So that is how you add assets. And you can add, checking X, 1, 2, 3, 4. You can do save and new, and it'll add that asset here to the chart of accounts and then allow you to add a new one. Okay? So that is how you add assets to your chart of accounts. If you have any questions, please let me know. I hope that was helpful. If you liked the video, please like and subscribe. It tells YouTube that you want to see more, and it helps us. And I will see you guys in the next video.